Back. Now, according to the World Bank report, Uganda is to attain, is one of the countries in Africa that will register relatively strong growth in 2020, buoyed by a recovery in agricultural commodities and sustained strong public infrastructure spending. Growth will age up to 6%. Can you believe growth will age up to 6% in 2020 because of induced public spending on infrastructure and also increased agricultural commodities in that regard? But how sustainable is public spending induced growth, and can Uganda keep up with the burgeoning debt? I'm now joined by Morrison Rakakamba, a member of the Uganda Investment Authority, to have this conversation and a lot more. Thank you for coming. So the projections by the World Bank right there, we are going to be taking a look at that. In 2020, Uganda will age up 6% growth, and this will be induced by public spending on infrastructure. How sustainable is that? And can Uganda keep up with the burgeoning debt?
Well, thank you very much. I think there are two things. There are actually two reports to look at. The first report is the Brookings Institution report, which came out a few days ago, that actually puts Uganda's prospects for growth at 7.2%. That is for 2020, 2024, for the next 5 years. So they're not just talking about 2020, but they're talking about a span of 5 years of, consistent growth. And I can tell you that, so Uganda will be number 4, in Africa in terms of, the first one is going to be Senegal. But you can see that that is huge. The World Bank report and many other reports, including our show robust growth of 6% plus. So I think this is something that the country should celebrate, because growth means more resources available for people to spend on public services, but also on private services in their businesses and all those kind of things. The question you ask is, what is driving that growth? And one of the things you mentioned is investment in public infrastructure, because public infrastructure accelerates private sector activity, across the board. If you're talking about trunk roads, it means movement of goods. If you're talking about community access roads, it means movement of products into the markets, but also movement of inputs into the areas of production at a cheaper price. So that's extremely very important. You saw that 2 days ago on Sunday, we launched, as Uganda Investment Authority, 240 million United States dollars into the Kampala Business Industrial Park here at Namanve, which is aimed at doing bulk water services, bulk electricity, aimed at reducing the price of electricity 5 cents United States dollars per kilowatt, especially for industries. Greening the park, what does that mean? It means that we're going to have a fully serviced industrial park. And this fully industrial service park means that you attract more factories, more investments that are coming into that park. And here is the projection. A fully serviced, a fully occupied, a fully operational park means direct jobs. That is 200,000 jobs. And those are direct jobs. But I want you to imagine the indirect jobs that are going to be, accessed. So really that is huge. We have also seen growth in services. For a company like Work for Phoenix, which employs 2,000 people that are delivering energy services across the country and solar home systems, huge employment. And if you look at the money, for example, that Phoenix pays in terms of taxes, pay as you earn, just look at pay as you earn, over 5 billion, per annum. So increase in services, but also agriculture. We've had very good rains, as you can see, over the past year, which portends for increased production in agriculture, and where we have a comparative advantage in the region. And as you know, for the first time, Uganda leapfrogged Kenya in terms of trade, where we exported more and imported less. And that is going to be consistent, because we have a huge comparative advantage when it comes to
Mr. Morrison, so
production.
those are the factors driving the growth. But then let's talk about sustainability.
Yes.
How sustainable is public spending induced growth? And how can Uganda keep up with the burgeoning debt? Because if we are talking about public spending induced growth, we have to keep on borrowing to actually...
No. Not at all, because there are two things. Once you're borrowing for what? If you're borrowing for consumption, for consumptive expenditure, then that portends a problem, because you're not spending the money in productivity accelerating interventions. But if you're borrowing for infrastructure, then you're borrowing for as an enabler, But there are some other sectors that are soft in nature that I think Uganda needs to embrace and understand. Look at this sector of tourism. You know, for the first time in so many years, Uganda leapfrogged 2 million tourists coming to our land, you know, in this country. And for 2020, the prospects are even bigger, because if you've been looking at the New York Times, which has a huge readership across the world, okay, it says Uganda is number 30. Only below Egypt and Lesotho in terms of the entire continent that is a top destination in Africa. And these tourists only last year spent 1.9 billion United States dollars in this country. And the country, Uganda, only spent $3 million in marketing. So look at that rate of return and see what potential that is there. So I think the diversity in this country in terms of how the economy is structured portends a very serious progress. You're talking about debt. So you are borrowing for what? I think I explained that. But also, two, is that we are still within the bracket of sustainable debt, because we haven't crossed the red line of 50% that was set by EAC that would put us into a deleterious situation.
So we are still at 36%.
Yes.
That is the threshold.
And the threshold,
is 50%.
The red line is 50%.
And we are still borrowing for more infrastructure.
But yes.
Don't you think we shall hit the maximum at some point?
If we hit the...
And that growth, because the point is, if we hit this threshold of 50%, the gains that we've made in 2020 and 2021 might start to actually plummet and go down, because we are starting to service the loans we had gotten to fund these infrastructure projects.
No, actually, what you may want to know is that for every dollar spent on infrastructure, you get 20% more. So investment in infrastructure, the return on investment is 20%. So if we're investing for consumption, I need to restate that. That would be problematic. But we are investing in infrastructure that has a 20% rate of return. So it therefore means that we can only achieve really accelerated growth as a country. Yeah.
And infrastructure, can't we also talk about maybe inducing household incomes in that regard, and maybe in private and individual and household incomes instead of focusing on infrastructure? Because if you improve household incomes, people will be in a better position to engage in commercial agriculture, which would actually benefit the country at the end of the day. But as it is, you're focusing on the roads and not household incomes. People are still engaged in subsistence farming. How beneficial will these roads be to these people if they are actually focusing on subsistence farming in that regard?
Infrastructure is not existing in vacuum. There is a reason for infrastructure. You need, if you don't sort transport, because what are the costs that drive what are the elements that drive the cost of doing business in this country? One of them is transport. If you don't sort transport, how you move goods, how you move outputs and inputs, that is a big problem. And for farmers and any other enterprise, that is a big issue. What is cost number two that drives the cost of doing business? It is electricity. If you look at private sector foundation, Uganda National Chamber of Commerce, data sets from Uganda Manufacturers Association and Uganda National Bureau of Statistics, they show you that one of the biggest costs that drives up prices, drives up the cost of doing business is electricity. The reason why we're investing in electricity is that we want to reduce that to 5 cents United States dollars kilowatt per hour, such that for businesses and industries to be able to manage their costs and become profitable. So if we want to do value addition, that's why we are taking electricity across the country under the rubric of the Uganda Rural Electrification Agency to make sure all these trading centers across the country, municipalities, have access to electricity so that people can set up big industries, mid-level industries, artisanal industries across the board. Such that we can be able to, expand productivity, expand value addition. That's a big issue. But you are not going to do that without infrastructure. Infrastructure is an enabler. President Museveni calls it, a binding constraint that we have to unbound through strategic investment. Yes.
Uganda is still doing poor when it comes to the ease of doing business index in that regard. In Uganda right here, the prime lending rates are out right there in the roof, 22%. So doesn't that suffocate the private sector?
I think that's a very good that's a very good question in terms of the especially doing business. We improved around 8 positions, and I think Uganda Investment Authority, working with other agencies, are working extremely very hard to make sure that we go down into the single digit. And some of the things have been really interagency collaboration. So now there is a new Investment Act of 2019 signed by President Museveni that allows Uganda Investment Authority to sign service level agreements with other agencies, whether it is URA, Registration Bureau, and others, to ensure that the business doing rankings do very well. You raise a very good point around interest rates, which is the price of money. And I think one of the biggest problems has been the crowding out of the private sector, because we still have public borrowing, especially for infrastructure. So banks tend to go for the easy and safe bets, with treasury bills and bonds. But I think that is the accelerating. Why? Because now we have got fintechs and digital financing that is delivering really what you call universal credit markets. That across the board people are borrowing on mobile money. Sure. They are moving money. That technology is huge. But also the credit markets are really seeing expansion and deepening of microfinance institutions that are very much more socialized within the communities, where people can borrow and invest in businesses and at a much more quite manageable rates. So I think along the way, as we democratize credit and create more platforms and opportunities, I think that the credit, the interest rates are going to continuously go down.
And of course, lack of value addition is still hurting the country's terms of trade position. How is the government aiding the private sector to improve value addition and also avoid exportation of raw materials?
Yeah, we are not going to ban, of course, export of raw materials. That is what we call incremental progress. But I think the biggest thing is making sure that the biggest binding constraint for value addition, which is electricity, is resolved. We have got skills and technology transfer across the world. I've just been hearing from a colleague from Private Sector Foundation, where the country is investing $100 million, I think, per annum, a fund that is about skilling Ugandans in terms of value addition. Tomorrow, the president is going to be launching the Uganda Industrial Research and Skilling Center in Namande, which is huge, that is going to be taking on interns, that is going to be taking on young people to skill them in value addition and many other aspects of doing business. So as a country, I think we have a strategy which we are taking on progressively, and we believe that eventually we are going to achieve common prosperity.
And the higher lending rates, do you plan in the near future to reduce them, so to make it easier for the private sector to engage in business in Uganda?
I think what I explained is that the banks are facing huge competition from fintechs and other credit enabling institutions, the microfinance, that are circling down and socializing credit in ways that banks will find huge competition. And as we accelerate public borrowing from these conventional banks, especially these less tactical money in treasury bills and bonds, as they become less competitive, banks will have no option but to push down the interest rates and reach out to the real people that are making their businesses survive. Because remember, the core business of banks is credit. If they continue behaving quite arrogantly, it is going to be a problem for them, because technology is making it more possible for people to lend to each other, for groups to lend to each other, and micro credit institutions that are more socialized in community credit, in small businesses credit, are digging deeper, thinking deeper, mobile money. So I think all these progresses are going to ensure that banks become less arrogant and push down the interest rates.
And in the forthcoming presidential parliamentary campaigns, politicians are actually gearing to spend more than 2.4 trillion Ugandan shillings, more than they spent in the 2016 election, around $655 million.
Yeah.
Don't you think this will have negative implications on the private
Well, I haven't looked at how the people who are doing the graphs and the scatter plots are trying to do that projection, because that is not just exponential, it is extremely geometric. metric in terms of the price of a vote, and a vote, in my view, shouldn't be priced. I think it should be the voters who should actually be, contributing to how elections are managed. But I think that's also not across the board, because I know a friend of mine like Leandro Komakech in Guru municipality spent less than 20 millions, but there are some people who spent more than 1 billion. So I don't think it's it's kind of a flat tendency. But also, as long as this money is not spent outside the country, is spent inside the country, because there is not going to be growth without stimulating aggregate demand. As long as many sectors are supported and people are given money to have disposable income and buy goods and services, I don't think that causes inflation, because there is a difference between stimulating aggregate demand and inflation. Inflation is when actually we don't have consistent capacity to produce the goods.
Besides public spending induced growth, what other alternatives can we look at to ensure growth in Uganda other than just that?
No, but you are sticking on that. But me and you, we have mentioned already so many, so many really sectors. We've mentioned the technology. We have mentioned technology and data. There is so much going on. People with ability to manipulate
technology and data. How can that propel growth in light of the fact that they are kept on social media?
No, not at all. Don't talk about kept on social media. The data I'm talking about is not the data that you put on phone. But if you look at companies like Phoenix and these major solar companies, we use data to manage credit, to be able to give people credit. We look at data.
Your history.
Yeah.
Your credit history.
Yeah, credit to analyze credit history and be able to deepen resources into communities. And we are apparently managing 300,000 households.
And technology.
Technology is a huge, ICTs and technology is a very huge opportunity. I've talked about tourism and the chain of services that tourism can deliver. We can never run away from agriculture, because that is where our strength is. Not just value addition, but expanding productivity and investing in successful advisory services to ensure that farmers have the advice they need, and that is happening. So those are really elements of growth. And I have told you, for the first time in the history of the economy of this country, is that we have better terms of trade with most of our neighbors, where we are exporting more and importing less in these economies. That strengthens Uganda. And I think the other broader area of growth, because I think we have tried to exhaust the internal drivers elements, is Congo. Congo is going to be strategic. I was very happy when I saw President Museveni meeting with President Tshisekedi and looking at the Eastern Congo strategy on how do we make sure that we do strategic infrastructure and have our goods and services. Because remember, for most of this side of Congo, Eastern Congo, Uganda remains their Dubai and Hong Kong in terms of shopping.
Morrison Rakakamba is a member of the Uganda Investment Authority, and we've been having these conversations centering on the fact that there are reports that are actually projecting that Uganda might actually grow by 6 to 7%.
7.2.
The World Bank report 6%, and another one 7%.
Brookings
2020 up to 2021. But then, how sustainable is public spending induced growth? That is the $64,000 question, and you can hit us up on our NTV Uganda social media pages on Facebook and Twitter. Right about now, I'd like to link to my reporter Stephen Bide, who is on the road to give you the latest in regard when it comes to